The Chinese stock exchange took quite a dip last week.
Look at process and look at chart.
While you're looking at process, yeah, the Chinese stock exchange, the Hong Kong stock exchange made quite a big correction last week, and it's made quite a recovery as well. Over the
I want to see if I can get this working.
Crypto
Yeah, better.
is, Greg, you can hear me, eh?
Yeah.
Earlier this week, yesterday, day before, I said if it breaks out of its channel, it's also a buy, and that's exactly what happened.
Yeah, also.
Hey?
Gone up nicely now.
It's gone up nicely.
Mm.
So, you know, sometimes one sits and waits for a level, for the price to drop onto a level to buy. But sometimes it doesn't get to that level.
Yeah.
And this is a clear example. Wait, let me just share my screen.
Geez, I'd be interested for you to look at process.
I'll just look on my other computer quickly. I think I looked yesterday, and it was still holding that level.
Yeah,
Much has changed.
Dropped down a bit, but if you look at the trend is very much downward.
It doesn't matter.
If I look at if you look at the what's the name, the RSI.
Yeah. Don't look at the RSI. Just look at the price. When it
Yes,
gets
yes.
into a middle range like this, when it's in a middle range, let me just get there. I'm getting there. It's PRX.
But you don't know what the shit the Chinese are gonna do, man.
You don't, but you know, it's come down quite a bit, and it looks like a good area to buy. And if that thing drops a bit more, it seems to be holding this level quite well. If it drops more, I would buy a little bit more.
Yeah, that's
And remember,
well,
you're in it for the longer term, eh?
yes, yeah.
You know, you're not doing a day trade.
No, I'm not trading, but
How's it, Graham?
if the thing starts dropping below, I have to think whether I'm going to stop my losses. Hi, Graham.
Graham's still connecting to the audio. You can't hear us yet.
Okay.
Still busy connecting.
How come Craig looks like he's sitting in a mist?
Because it's that light coming through
yeah.
the window on the side.
Is that it?
Yes, Graham,
Yeah.
you're able to hear us? Yeah.
I thought maybe his camera lenses.
Can finally hear you.
You can hear us, eh?
Finally.
Yeah.
Hi.
How's it? How's your neck?
Yeah, and yes, so. Sometimes better than others. I think we're on the mend. Thanks.
You think, jeepers,
overall it
you
was a-
should know by now.
Well, yeah, it's a slow process. Well, there's still a lot of pain, you know. I mean,
Really?
it comes and goes, yeah.
You shouldn't be in any pain.
Well, I'm taking stuff for it, but yeah, well,
Really?
what can I say?
Shame, man.
So it's not better than it was a month ago, before the op.
Yes, I'm sort of having less pain or less moving my neck around. That's the thing. But you know, I won't say I'm not pain free by any method. I mean, I'm still a bit stuck.
Might take a bit of time.
Where is it sore?
I don't know. It's around here, the base of the neck. That's why. I mean, I was quite surprised when I heard you said basically you had it, and I could sort of very shortly
play
after.
golf.
Yeah, you were done.
Yeah.
You know? Well, we can only hope and pray.
Yeah, you see, mine Mine was, my arm went completely lame. I
Yes.
couldn't lift up my arm.
Mhm.
And it was quite bad, and I was in massive pain. I couldn't
Yeah.
sleep.
Yeah, yeah.
And then the minute they did the op, it was
Chalk and cheese.
within chalk and cheese.
Mm, mm.
Within a week, I felt
Yeah.
a lot better. Look, it
Well, you
was
certainly
never.
inspired me.
And some days you get a spasm, muscle
Yeah,
spasm, and I take a anti-inflammatory
Yeah,
for one
yeah.
day,
Mm.
and that's maybe once in 6 months.
Mm. You were the final persuasion to me to actually have it. So I'm not
Okay.
blaming you. But I'm just saying.
No.
that After meeting you, I decided, yeah, I'm going to get this.
Yeah, you can. You probably will be okay. A little bit of
Okay.
physio. A mate of
I'm doing
mine had a physio, and he's still, 20 years later, he's still on physio.
Mm. Well, avoid this position. Sort of. I don't want to sleep or look at my cell down in my lap or something. Anyway.
But I can tell you for free, don't pick
Yeah.
up anything heavy.
No, I'm not going to do that. There's no chance.
And you're not supposed to actually do, lift stuff up above your head.
Yeah.
They'll tell you all that.
Okay. Craig, I can't really see your face. I don't know if anyone else can. Oh.
Yeah, no, so-
There.
I was just typing something on the other keyboard there.
Okay.
Oh,
I'm back.
okay.
All right.
So those of you, you the Bitcoin people, I'm the process people.
Yes. You're the rational guy.
In this market, nothing's rational.
No, God, I mean, what are the Chinese going to do? They're shutting everything down.
Yeah.
Yeah, but let's,
That's more
um,
just causing more uncertainty. Maybe they've got some idea that they want to buy up while the market is down.
yeah. Often that happens.
Yeah, who
Then rumors
knows?
get spread so that prices can drop so that they can get in.
Yeah.
Yeah.
Musk has been doing that.
Yeah.
Well,
I'm just
looking at
it now.
Bitcoin,
It's sort
I'm
of-
surprised it's broken through the 50-day moving average, and it's approaching the 200 moving day average. It nearly got there.
Well, I'm happy to say I'm
no-
35 grand up since this morning. So
Hey? Say again?
Wow.
it's okay. And I'm now using stop loss limits so that I make sure I don't drop.
Wait, just come again. Say again what you said now, Graham.
I'm 35 up.
Yeah, but
since
what
this
about
morning.
what about a stop loss limit?
Yeah, I'm putting in stop losses fairly. I'm raising my stop loss all the time so that if it drops a bit, then I'm out.
Yes.
Maybe I shouldn't be doing that, but I've become a lot more cautious than I was at the start of this course.
Yes. No, that's great. What it's a
Might be a mistake. I mean, I don't know what you think on that.
yes. Or are you putting in a physical stop loss or is it a mental stop loss?
No, physical stop loss,
Physical.
which I adjust as required.
Yeah, you raise it. You raise it. They talk about
mm.
ratcheting it up. So you ratchet it up. But one can so often see when the trend turns, it doesn't just get to a level and just drop.
Yeah.
It comes down and it tests it and it
Goes up. Yeah,
turns.
you're right.
It turns. It does that. It literally turns at the
Yeah.
top and then it comes down. And when it gets to the bottom, often it's like a turning process and then it starts going up. It's going up. It's still going up. I'm watching it here in my one eye. Let's what did you guys think? Let's just share some thoughts. What everybody thought. Did everybody manage to get through those 2 chapters on the psychology?
Yes.
Yeah.
You're a speed reader, Graham. I've noticed that.
Well, I don't know about that.
It's all those books behind you. Yeah, some good.
No, I've told you those are leather-bound telephone directories. It saved me from having to buy the real thing.
Jeez. I
What,
don't even know how far I am.
Yeah.
I'm just kind of, they're talking about trading, all those different trading attitudes.
Are you there were 2 chapters. Are you in the are you in the first of the 2 chapters?
I don't know, because with a Kindle, you don't know where the hell you are in a book.
It's chapter 1 and 2.
Yeah, no, but I don't know. I must go and have a look. I don't know
Okay.
where I am.
But
I'm way past the AA Alcoholics Anonymous section.
Yeah,
you
I'm
don't know
trying to
whether
get
you
onto
went
the
into
Sex
the next
Addicts
chapter.
Anonymous part now.
Hey?
I'm trying to get onto the Sex Addicts program now. Sorry.
I found that quite amusing, where he talks about trading is a lot like masturbation.
Yeah.
Because it's the reward,
Endorphins.
Yeah.
The endorphins.
combined with, it's not that now, but it's clicking the finger. But the fact that your hands must be busy and that it creates mental stimulus. That was quite funny.
But how's his philosophy about you have to have a trading view that you don't want to make losses. You've got to make profits.
Yes. A lot of guys, their whole approach is not, your approach has to change from how much money can I make to I don't want to lose any money.
Yes. No, the other way around.
It's a very important mind shift.
You don't want to lose any money.
Yes.
Whatsoever.
Yes.
It's not about the profit, chasing the profit. It's you avoid the losses.
Yes. That's why they talk about letting your winners run and cut your losses. Because you can do fantastic trades and you can make a lot of money, but you end up throwing it away with stupid losses. And it's very soul destroying, and it really screws your head up. But Craig, let's start with you. What did you gain from reading? Did you manage to get through the 2 chapters?
I didn't quite get through all of it, but I got about halfway through the second one.
Yeah.
I found that what was very interesting, which affects me, is that the thing with the taking the emotion out of it, because I get very freaked out when it's going down, and then I often sell when I shouldn't. You know what I mean? Instead of riding it out, let's say for another few days, and it's getting that emotion out of it. You know what I mean? And managing it as such more. And
well, if you go small, what they suggest, what he says, go small. Don't bet the whole blooming bank on a trade.
The minute you go into a position that's too big and it goes against you, it screws with your head a lot quicker, and then you end up doing stupid things. Whereas your whole approach must be, he talks about, are the bears in control or are the bulls in control? And very often the market will drop onto a level, and that exact level, when the market drops, it often drops very quickly. And when it gets onto a level, and that's the last guys that are really panicking and getting out, closing their positions. And then you'll see, then suddenly it turns. But the bottom line is, you shouldn't be in that position. You shouldn't be putting yourself through that mental stress. You should have had a stop loss higher up. And you shouldn't be in a position where this market's going that much against you. It just shows that then you're doing something wrong. And you've obviously, you guys have been trading long enough now. You might have heard the expression about catching a falling knife.
Yeah,
I haven't heard that one, but
Hey, you haven't?
not yet.
When the market, and what a lot of guys do is they put in buy orders below a certain price. So in other words, let me just go and
you see, the pension funds have a sell order if it goes below a certain level. Like this process and NOSPAS, all the pensions funds sell. And that's where the institutional guys buy. And this is the story about the sheep and the pigs and the hogs. You get slaughtered, the domskape get slaughtered.
Okay.
You guys can see my screen with all the
Yeah.
boxes in.
Which one are we looking at?
Okay, let me just open up Bitcoin, for example, because Bitcoin has very volatile moves. I'm going to go into the 4-hour. This area here remains a very good example of where one could have thought that this is an ABC correction, and the C correction would have finished more or less in this area. So often what guys do is they'll put in when the price drops, and they don't understand technical analysis, or sometimes because people are maybe a bit lazy as well, not wanting to look at charts. What they'll do is they'll start putting in buy orders. So they'll typically put in a buy order because the guy thinks it's going to drop somewhere here, and then he'll put a buy order in there, and then he'll put another buy order in just below that, and carry on putting buy orders in, and stagger them. And I just want to tell you guys today that that's a very dangerous practice.
Yeah.
That is what wipes guys' accounts out, because it's all right if you thought the market, but the bottom line is when the market drops, you don't know, nobody knows for sure where the market's going to stop and where it's going to turn. And you must rather let the market show you where it's turning. Don't try and guess where it's turning. And the minute you go and put in buy orders and you stagger them, you're playing with serious fire. And it's actually a form of laziness, because the market will show you where it turns. You'll either get a big candle, you'll get they call this a doji. That's where prices get bought up very quickly, or a trend line will break. So I'll get back to that confirmation we spoke about 2 weeks ago. Let me just bring that slide up. You remember we spoke about confirmation. You guys can see this over here, right?
Yeah.
This confirmation. You guys have got that slide, got this slide, and I'll post it on the group as well. These are things you look for, and that is what confirms that the price is turning. What we all need to do is we need to identify, and we know already now how we can identify a potential turning area, okay? And it's normally a fib level, or it's a moving average support. There's something that you'll find that will support the price, a horizontal support level, something. You'll find something where you suspect that the price is going to turn. So that's where you go and you look closer in, you zoom closer in. I'm going to go into the 4-hour, for example. This is now where the market turned last week. So, and this is a support level here. Now, none of us knew that the market was going to turn there. Nobody out there knows that. But the market could have dropped through here. I've still got this 5-year. I thought the market was going to go down to this level over here. So to go and put buy orders in here, look, this is also a different scenario, because the market has, I'm talking about this area now here, the market has already dropped very far. So, you know, you can maybe put in one buy order there and maybe it gets triggered. But to go and put in a whole range of buy orders over here is just a practice you must stop yourself from doing, because one day it's going to bite you, and it's going to bite you very hard. It's better to identify an area, a zone, and you know, this is on a support level, etc. Identify a zone then let the market show you that it's turning. And that is a clear picture there, this bigger candle here. And you could draw a trend line in. Like I said, I start drawing in trend lines. That trend line is a bigger trend line. But when this market starts, I start drawing trend lines that connect higher areas closer to where the price is. So there it breaks a trend line, for example. And then you rather get in. It's better to rather miss this first bit of this little move here and get in and join the trend than try and catch a falling knife. You know, guys, understand what I'm saying? A lot of professional traders actually add to their position. So once they enter a position and they see it's going in their favor, they'll then go into a second position, but on the positive side. So they add to their positions versus a guy who hasn't got experience, doesn't really know where to look for his reversal or identify a possible area, a zone where it could reverse, and then go and put in a whole lot of buy orders. And here, for example, breaking the trend line, this whole thing about FOMO as well, it's FOMO also that makes you stagger buy orders because you're scared you're gonna miss out. But you're actually safer off waiting for the market to turn. It's broken a trend line, it's broken a moving average, and now it makes a flag or it makes a triangle. That is a very good area to get in. There it made another flag that you can get in. Here, for example, where this price, this is now what happened this morning. I'm just going to go into the 1 hour. Yeah. So there it's broken your trend line. You can even go into a 15-minute. If you're not, if you're not in this trade, this is where you can get in. You see, it's made a triangle there.
Yeah.
This is where you can get in, but it's very important that if you do get in there, that your stop loss is just below you.
Yeah.
But this is a safer bet than trying to stagger buy orders. But once again, this was a potential turning. Look at drop below that support level. It didn't quite reach the support level here. It came exactly to the 38.2. And very often when a market reverses it, it does. If this trend here is going to continue, it very often only drops onto a 38.2 level before it carries on going up. So stop being scared that you're gonna miss out on this first little bit of this move. Like I said when we started, now we're often looking for support zones where we can buy, but we must also be wake up enough. We've drawn that trend line in here, that if it breaks that trend line, we also buy. So we're either going to buy down here. I was actually looking at this level here. These, okay, well, hold on a second. These are in the wrong place. There's the 200. There's the 50 over there. There's the 20. The 20 and the 10 are both sitting in that area. There's the 20 and there's the 10. There's the 50. I was waiting for it to get, that's a very nice support level. It's that low, and the 50-day moving average is sitting there as well. I was going to buy over here. So often the price doesn't get to a support level that we've identified, but then if it breaks a trend line like that, you can buy there as well. But you know that your stop loss is going to be close. It's going to be here somewhere. All right, you guys with me, eh? So it's two different ways of approaching the market, and that hopefully having that approach And also then knowing that you can put a stop loss in that's close here, that should help you overcome that FOMO mentality. I've got a slide here on FOMO. Let me just go and find it. And let me just bring it up and just to see what other points I made here. I said it takes time to turn a battleship around, especially bigger, larger corrections. The longer a trend's been in motion, the longer it takes to turn around. It doesn't turn around immediately. Okay. Price needs to get above. All right. Now I mean this is not a long-term trend. This trend's only been going over the last day. I'm talking about a longer-term trend. Doesn't just turn around immediately. Then as well, price needs to get. This is just a broad outline. You guys can go back and refer to this. When a price really turns, it needs to get above the 10, above the 20, above the 50, and above the 200, and it needs to stay there as well. And those are all indications for you that the price has turned. Non-impulsive behavior. The market gives multiple entry areas after a turn, typically flags, pennants, or dropping back onto a support once it's turned. It's going to give you opportunities to get in once it's turned. The bottom of the absolute bottom of the price is not the only time you can get in. I talk here about bottom picking. Let the market show you where the bottom is, not for you to guess, decide, and that ties in with the letting or looking for confirmations, breaking of trend line, etc. that we've gone through. Okay, confirmation. And I say when more buyers besides you are finding value. Okay, it's very easy to think you being clever and you're the only guy busy buying. Meantime, this market's still dropping. When everybody thinks this is a value area, you're going to see it on the chart. I say a bottom picking is a gambling mentality. Real money is made after the turn when more people pile in. Pro traders scale in after the turn. They add to their position that they go into a position when the market's turned, then that goes into profit. Then they start adding to their position. Martingale, you can go and read up on Martingale. Martingale is that averaging down and placing multiple buy orders. Guys doing gambling in the casinos. If they're playing roulette and they lose, then they double up. You all know what doubling up is for guys who gamble. You double up.
And if you play black or red.
Yeah. Daai gaan jou hart byt.
Well, I've played that game 7 times. Flippin' red came up. 7 times.
So you should have played the 8th.
No, the money was finished after the 7th time.
7, because you're doubling every time. So you double 7 times, boy. Then you at table limit already.
Okay, I say when one market is not moving, look for a different market to be involved in. And I actually want you to get, if there's enough time today, get onto the S&P 500. The S&P 500 is a very nice thing to trade, or the index is a nice thing to trade, and on a shorter term, and you can make money there if you. Crypto is not the only thing. Entry after trend change. This is basically getting onto the trend once it's changed. I look for a flag, a pennant, or a moving average where it comes back to a moving average. Like, for example, shit, I haven't got my moving averages on that chart. Let me just go and see. Let me go to a different one. On this Bitcoin chart here. Yes, this is what I wanted to show you. Yeah. This is that same area where the market turned last week. Okay, there's your trend line. There's another trend line there. So there, this candle already is a pretty good indication that this price is turning, and it's on a major support level. But you see how the price, this is on a 4-hour now. You see how the price finds support here. It's number one, it's a flag or a pennant here, but it also finds support on the moving average. I'm going to go into a 1 hour because now remember, I'm not talking, you haven't got in here. You weren't lucky enough to get in here. Now how do you join? I'm going to go into the 1 hour. This is that area over here. There it breaks that trend line. You see how it comes onto this moving average, and there you get a candle that comes off the moving average.
Pulls it up.
Pulls it up. You see here, it's holding on the moving average. That's a small little flag. And you know, if you haven't bought there, you buy here because this is a very small correction. Your stop loss is going to be just here, so you don't have to stress about it. Here the market comes back. Look how beautifully it comes back onto that moving average. Here it actually broke through. This caught me out a bit here.
But you see, Graham would have at that's a big blue support line. You'd have got out of it.
Yeah.
Because he's got the ratcheting stop losses. He ratchets it up.
Yeah,
Then suddenly
you could have
suddenly you would have
to
sold. You would have sold
Right.
when it broke through that trend line.
In other words, what you
That's
saying,
the right thing to do.
what you saying is he would have.
He would
this
have
is another
bailed there.
ratchet. This is another stop loss over here.
Yeah.
Let's just get rid of this blue line here.
Can I just mention something just quickly on the psychology, because I know I sit with it, and that is this: if I've got, for example, 200 grand in of ammo, or no, I've got 200 grand available to play, right? So now I see, okay, I buy at what I think is a good price. So I buy for, say, 100, okay, keeping the other 100 back for, if things go down where I think I can do a better buy. Okay, now I've suddenly got when I get a really better buy, now my full 200 is in there, because psychologically the frustration I have is I would rather take a profit on 200 invested rather than 100, which all of us feel. Now, I've been looking at the psychology, but what would you say about that, Jacques? Did you say that's too gung-ho or too greedy?
Yes, that's high risk, because if you're not in with a full 200 and the market goes against you, the market starts turning down.
Yeah.
Now you're going to start going into a loss. And
No, but he's got 4 bars lying around, so 200
well, that's
is
not
nothing.
in the market.
No,
No, I haven't gone quite that big yet.
No.
Sorry.
No.
Maybe tomorrow, but at the moment I'm still trying to hold back. My therapist is helping me working through this.
If you, the big problem comes in, you're not in with a full 200, and now the market turns and it starts going down. Now, the further the market drops, the bigger the loss, and the harder it is for you to close the position.
Well, what about a stop loss? I mean, say you've got 200 in, and then you put in a stop loss at, say, 185 to trigger at 180, i.e. you're prepared to lose 20.
Yes, that is. Yes, but also, if the price goes against you, it's very important to look. Maybe it's going to come onto a support level quite soon. So if the market goes against you, the most important thing is to chill out for a minute. And just relax.
Yes.
And I mean, and have a look if there isn't a possible area that it's going to find support at.
Okay.
Quite soon.
Okay.
Yeah. You see, here it's still. Here you can see this trend change here. Once again, you've got a trend line that you can draw there as well, and it also depends where you've got in. I mean, if you, let's say for example, this market's moved like this now, and it's come up here. and you're still not in this in the trade. You haven't got in here, for example. You haven't got in down your.
He would have got out of the trade because when it starts correcting.
All right. Let me address that point. So let's say you got in here somewhere and this price goes up, and you start seeing a candle like that. That makes your hair go up, because that means sellers are coming in. The sellers are bringing this price down.
Yeah.
Now this is your stop loss. Now you could
keep raising it.
I would have had my stop loss over there.
Yeah.
Okay. Then the price goes up, and then it triggers your stop loss.
Yes.
And now you're out.
But you're out a bit high, a bit close to the bottom. That's in that example, for example. I mean,
This is not just
the stop loss higher than that.
Say again. You mean your stop loss would have been up there?
Yeah, more there, because if you're putting the stop loss where you just had it, then in that particular example, everything's different. But if you have it where you've got it now, you're pretty well, as it happens in that example, quite close to the bottom. So you've just sold there, and you're not far off the bottom when you've sold.
All right. Very often, I normally like putting my stop loss in just below, like a previous area.
Okay, yeah.
Like this. My stop loss would be there.
Bottom.
Yes.
Okay.
There's no previous there.
If you start taking your stop loss up, I mean, if let's say you were still in here, you're getting very close with the stop loss. Okay, you can argue that this move's gone quite far, but now we have to look here as well. We have to look what's happening over here for us to help us decide. That's the reason the sellers came in there. So it's because of this. So you need to look as well at what's busy happening. But the point I want to make here is, let's say, for example, this is pretty late in the move, and what I often do as well, because it's had quite a move already, and the higher up it goes, it's natural to start bringing your stop loss closer and closer.
Yeah, absolutely.
Because you're scared it's going to turn. All right, but let's say your stop loss was there. It's below this previous low over here or something, and it breaks through. Okay, now you're out. That's not the end of the world. Not just remember one thing. It's often not a good idea just to jump straight back in.
Yeah.
Just chill out a bit and just have a look at what's happening. Give it an hour, give it 2-3 hours, give it half a day. Now it comes back, because now you're out. At least you've made profit. At least you haven't made a loss. It comes back and it finds this kind of support here. When it finds support there, there's nothing stopping you getting back in here and then putting your stop loss over there. Because the important point I'm making here as well is that whenever you go into a trade, you must always have a reason for going in. And in that book, he talks a lot about that. He talks about having a plan. You've got to have a plan, because you'll only be able to identify where to put your stop loss and where to take profit if you've got a valid reason for going into a trade. You don't go into a trade just because you feel like it. That gets back to a gambling mentality. You've got to be able to, he talks about keeping a diary, and guys who are serious keep diaries. And when you go into a trade, even if you keep it on your chart, you can make a note there, and you can put a note there. What I often do as well is I put in an arrow. Let's say I bought there, I put in an arrow there, and I know I bought there. Or let's say I bought over there for some stupid reason. That's not a great place to buy. And then I get stopped out. My stop loss is there.
Well, that's FOMO. That'll make you do.
Let's say I bought there.
Do that.
And my stop loss was there. I got taken out there. This stop was over there. Then I leave that arrow and that cross in there, because at the end of the week, then you go back, or over the weekend when you chill, you go back and you have a look at where you bought, because your arrows are still in there, and you have a look where you got stopped out. And that's the only way you're going to learn. And that's when you're going to learn, and you're going to see patterns in your behavior. It's going to start opening up. It's going to really start opening your eyes up. When you can go back and have a look after every week where you got into a trade, and go and think to yourself, why did I get into that trade? But you should actually,
Make a note.
you must make a note.
Hmm.
But at the end of the week, go back and read. Go and read what you wrote there about why you got in. But the point I'm making here is that you can only define where your stop loss is going to be if you've got a reason for having got into the trade. Here I can go in and I can say, okay, my motivation here is that it came onto that moving average. I can also, I like to have more than one reason. I like not to just have one reason. Can you see it also came onto the 38? Remember what I said to you, often in a strong trend, the price retracts just onto a 38. So now I've got two reasons. It came onto the moving average.
Mhm.
I can even say a third reason. There's a reaction here. Okay. It didn't just carry on dropping.
Mhm.
So now I've got three motivating factors for me to go into a trade here. So I'll go in and I open up a position there. But my stop loss is here. My stop loss is not going to be down here somewhere. It's going to be over here. Because that was my reason for going in. And the minute you ignore your initial reason for going in, or not having a reason, you're going to start moving your stop loss, because this price is now going to break there. You're in a trade already. This price is going to start dropping, and what you're going to do, you're going to start moving your stop loss down, and it carries on dropping, and you move your stop loss down, and then you just get bigger and bigger into a loss. And the bigger the loss becomes, the more difficult it is to close the trade and to get out. He doesn't even talk about that in the book, but that's a big psychological problem. Is for anybody to admit that they're wrong. And you've in this game, you've got to be able to admit yourself very quickly that you're wrong, and you don't have to use the word wrong, but what you can say is that the price is not behaving the way you anticipated it to behave. Okay, if I went in there, if I go in here now, I went into the trade there, or let's say I didn't get in there, I got in after a turn, okay, because then I start looking, okay, there's a trend line that broke. Okay, I'll get in there. My stop loss is going to be over here. Okay, this blue thing's my stop loss. My stop loss is going to be over there.
And then as it moves up, you shift your stop loss.
Flag. This is a flag over here. But once again, my motivation, my reason that I can go and write down in my diary is it broke this trend line. It's broken the moving average. There's a serious candle here. Here it actually broke a resistance level as well. There was a resistance level over here. That previous high is a resistance level. There's the 10 period moving average as well. It broke through. It's well, a bit later it broke through that. There's the 20, the 200. So this thing actually turned here very close to the 200-day moving average as well, and the 20s just below there. So I've got motivation. I've got reasons that I can actually go and write down why I went into the trade there. I know I'm repeating myself, but this is very important. Only if you've had a reason to go in a trade are you going to be able to define where your stop loss is going to be.
And you obviously shift your stop loss up as the thing moves up.
Typically, now the price is up here. Let's say I did get in there. Okay, let's say I got in over there. Now my stop loss, actually, I'm going to move it up to there. I'm going to move my stop loss to over there. Over there. And see how this plays out. And the other thing I'm going to do is I'm going to start looking where I can draw a channel. Because, okay, this is still very early, but the first thing I'm going to do, like over here, let's just go back to this area over here. Let's say that wasn't in there. The minute this happened, it comes back onto there. Now I can start drawing a channel. You see it stays in this channel. I sometimes draw it, ignore those over there, draw it tighter. Look at this here, it suddenly breaks out and we've spoken about this, and it's in the book as well. It's in a channel, it breaks out of a channel, that's very bullish. You see here as well, it actually came back onto that channel and it found support there. And you often see that happening. So it's this top end of this channel broke out and it found support here on top of this channel and the 38%. This was a funny little move here. This looked like the price was reversing. But typically, you remember, you guys are only buying, you're only going long, but a lot of guys are playing this market both ways. They're shorting it as well. And this is a stop loss run, because with this happening here, guys would have shorted the market there. And then this is a flag. This looks like a continuation pattern to the downside. Can you see this is a little flag here? It looks like a continuation pattern to the downside. The price breaks, it comes up. If you're not in here as a short, this is where you sell. This is your second entry level, but your stop loss is going to be there. And this crypto market, there's guys out there playing games with you.
Lots.
And you got to be aware of that. This is a stop loss run, because guys have got short here, and what the guys do is they push the price up, and they create liquidity that way. They're taking out all the guys who shorted the market. They talk about a short squeeze. You can go and Google short squeeze, read up on a short squeeze. This is a short squeeze. Guys who've shorted here, their stop losses get taken out. And what it does is it goes up, it takes out all those stop losses, and it turns. And look, it comes down. I wouldn't be surprised.
Somebody would have lost a lot of money there.
Yeah, well, of course, if you'd shorted it. This almost looks like a kind of a stop run as well, of stop losses of guys who started shorting here. But we don't know. Let's see what happens. Let's see how far it goes. You see it stalled on the 38%. But let's see. We don't know where it's going to go from here. This is, let me just delete. There's a lot of remorse here now. This is another way I'd often draw a channel. You see what I've done here? I've drawn, I'm just going to extend this a bit. The minute I draw it across the top there, and then I draw it on there. And when it breaks, there's also indication that this trend is actually changing. But now that'll be resistance, over there. This is resistance. It's the 50%. It's again this line here, and it's the 50%. So you got to see what happens over here. If this was your first move up, and this is one, we could be doing here. This is a possibility. You're always looking at all the possibilities. Something like this could be happening here.
ABC.
It could be an A, B, and a C down to here.
Yeah, that's what I thought.
So
and then it's going to do another five thing up.
Let's just
go up. So
just
why
take
even bother?
That's the 50. So we're continuously looking at what all the possibilities are. So this is, let's assume this is a new uptrend. That other guy that I follow is still saying that this is an ABC correction and this is coming down, and it's actually going to go below this level. We don't know. But let's assume for 1 minute that this is the bottom. This was the bottom here. Okay. And this was a 1, 2, and now it's made another 1, and we're looking for a 2 over here somewhere. So in other words, if that's 1, then typically 2 will be down here. 2 often retraces 50% or 60%. Even it can even come as low as this for a second level for ABC. But very often, if this now goes up, this B, let's say it stalls here. and the price starts coming down, then we already got a pretty good idea where C is going to be, because C will be
And
this
that's
will
support
be
line.
will be this height. We can take that height there and we're going to measure it there, and that's where C will be over there. You guys with me? A,
Yeah.
B, and that C leg will equal this A leg, this drop. Graham, you with me?
Yep.
Craig,
Yes,
Yeah.
you're still here.
yeah.
So that, and very often you'll see as well that this level then will coincide with a Fibonacci of this level, of this pullback here. You know, this channel, it might not be valid. It might go up there, or it might go up there. And let me tell you, the higher this goes up, then typically you'll measure it like that. Then C will be over there, which could coincide with that 50% there. All right. So let's see what happens here now. And it just, I don't see how this is going to make a new high here. I just don't quite see it, because if this is not 1 year, it means one has to be here somewhere, and that means this is 1, 2, 3, 4. This leg here is too big for a 3, 4, and then a 5. The guys of you that have been reading up on Elliott Wave, Graham, you should understand what I'm getting at.
Yeah.
If I say this is a 1, 2,
Yeah.
this looks like a 3, 4, 5.
That's a nice big 3 there.
Yes. Remember, 3 is always your longest leg.
Yeah.
So this could have been a 1, 2, and then it's a 1, 2, 3, 4, 5. So inside here, there's a 1, 2, 3, 4, 5.
It's difficult to see the 1, 2. I mean, it's such a small movement to say
Yes.
that's a 1, 2, isn't it?
This,
I mean, just asking.
let me show you how this could have panned out. This would have been a 1, 2.
Yeah.
Here, 3, 4, and then obviously 5 up here at the top
5.
here. 5,
Okay.
okay. Now remember, you always have to look for your smaller divisions. So here, this would have been a 1, and let me just make this in a red. That would have been a 1 there. 2, 3, 4, and then 5 for the red. So here you have your smaller 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, which then takes it 1, 2, 3, 4, 5. You guys understand this numbering I've done here? Remember?
Yeah, but geez, it's in the eye of the beholder.
Yeah, it
you
is,
could-
I'm afraid.
Yes, and that's the problem when you start numbering something. It can become
I wouldn't see that.
Hey?
I wouldn't have seen that.
Yeah, but you guys do understand that from 2 to 3, there's normally a
huge.
5-wave subdivision.
Yeah. Okay.
You understand?
Okay. Yeah.
So
okay.
in your third leg up, which is normally your longest leg, you'll get 5 subdivisions.
1,
And
2,
there my 5 subdivisions are 1, 2, 3, 4, 5 up to there. So that's my 5 subdivisions in this bigger blue 2, 3. And then inside here, you can also go and look, you'll see there. Now this 4, 5, yeah, 1, 2, 3, 4, 5. That 5, this 5 is actually there. This 5 is actually over there. Okay. So, and in here, typically, you can go and look for, this looks like a 3, 4 here. So this 1 would be over there, 1, 2, because this is a 1, 2, 3, 4. 3, 4 is often a triangle. 3, 4, 5. That's 1, 2. Then it goes 1, 2 here. 1, 2, 3, 4, that 5 will be there, that 3 will be there, 3, 4, 5. You can see here 1, 2, 3, 4, 5. Look in this last move up here, 1, 2, 3, 4, 5. You can very often find these smaller subdivisions. You see the 1, 2, 3, 4, 5 here. This is now from 4 red, from 4
Hard to
red
see.
up to
I'm sorry.
5 red. You get 1, 2, 3, 4, 5.
No, man.
It takes a while to
Jesus.
spot it.
It's easy with
Don't look at
hindsight.
NASDAQ. If you look at the NASDAQ chart, there you're going to see his rubbish. Eh? My goodness.
When you really start, I'll show you guys who number that thing. You can't believe what they come out with. But the bottom line is, that's very tricky. Stick to the simple things like trend lines, moving averages. Those things work. To try and start numbering, you guys must understand in the basics of Elliott wave, and that you're getting impulsive and corrective, and this looks like a 5 wave up.
And then you'll forget about the second leg's got to be longer than the third leg and all that stuff.
And is it a second or is it a B?
Yeah. Now the big.
Okay.
You guys know who've read up on Elliott wave. You remember the C leg is always in 5 waves. So in other words, if you have, let me just go and find my drawing tool here. If you, I'm just going to draw anywhere here. If you, when you, let's assume the price has now gone up. Now you have a B, C correction. Your A leg can either be 3 legs, 3, 1, 2, 3. Then it'll be 1, 2, 3 up to B, but your C leg is always in 5 legs. Always. Your first leg, your A leg, can sometimes be 5 waves. So it'll have a 1, 2, 3, 4, 5. Then 3. B is always 3 waves, but C is always 5 waves. Now that's where looking at this is definitely a 5 wave move. That's pretty clear to see. But now the question is this an A? Oh, make that. But you guys know where I'm going because we've already discussed this. Let me make that an A, like that. A. Off this bottom here, is this just the big question now? Is this just an A, B, C correction? That's now C. So from the bottom here, is this an ABC correction? So this is just a correction, and now we're going to go lower, and we're going to go below this level. Or the other possibility.
Well, it depends whether it's a bull market or a bear market.
We don't know. We don't know yet at this point in time.
But it looks, if you look at it, I mean, you're just looking at
daily. Look on the daily. This could be a 3, 4, and 5 could still have to come over.
Yeah, it's moving sideways a bit.
Exactly. You can't say this is back in a bull market. And that's all the debate now. Remember, as I said, I follow a lot of other guys, read what a lot of other guys are saying. Some guys are saying that this is the bottom. So in other words, this 3, 4, 5, the 5 is finished here. And this is now the start of a new up leg. And instead of an A there, they're going to label this as a 1. That'll be 1. And this will be 2 down here. This is going and look at that. So this could be impulsive here. This is not a 1, 2, 3, 4, 5. Forget it. Up there, you can't put the 1 there because this looks like a correction. So you can put 1 there. Then you can say this is an A, B, C leg down. So that's a 1, and this is a 2 here. But let's say that's a red, and then this is now your next 1 up here, and the next 2 down here. So it's 1, 2, 1, 2 before it carries on. But we don't know yet. We'll have to see what happens here. All right. One's got to take this one step at a time. the most important thing with trading is to react on what's happening. The minute you start trying to predict too far ahead, you're gonna the minute you start predicting too far ahead, what happens is you've now in your head, you've taken on either a bullish scenario, a bullish mentality. You've taken on a bullish mentality or a bearish mentality. And the minute you've got either a bullish or a bearish mentality, it's going to prevent you from seeing the reality of what's actually happening. And it's going to make you move your stop losses away from where they should be, whereas your approach should rather be watch how it's unfolding at the moment, and trade what you see and what the price is doing today.
Yeah,
I know that channel. I know that. Let me just go back and share the screen. I know that this thing broke the channel there. I know it broke the moving averages. This RSI, by the way, would have given you a divergence here as well. Okay. You see this massive divergence here on that high.
Yeah.
That divergence there. That divergence there. That RSI is much lower. The price is higher than here. So if you were trading on a platform where you could long and short, you would have shorted up here.
yeah.
In other words, you haven't got a bullish or a bearish bias. You are merely trading what the price is telling you on that day. As it's unfolding, you're deciding whether you should go long or whether you should go short, or whether you should take profit, or what you should do. Don't make that mistake on any instrument of trying to think a day or two or three ahead. The only place you can take that mentality is maybe on the S&P 500, because the S&P 500, we know what it is. There's no real fundamentals on crypto. The guys will tell you this over and over. We don't know what's going to happen with legislation, etc., etc., etc. But looking at S&P 500, you can have a bullish mentality.
Look at NASDAQ.
This is the S&P 5. This is the S&P 500. Well, how are we doing for time yet? It's 6 o'clock.
Have a quick look at NASDAQ, Jacques.
Then okay, I'll go there now. Are you guys still all right for another 15-20 minutes?
Yep.
15 minutes.
This is our last session, isn't it?
No, we can have another session.
Okay.
I really think that Graham, I got the impression that you I think out of the 4 students, let me put it this way, you're the one who most probably does the most trading, or you can actually qualify yourself as a day trader.
Well, I just see some a trade just gone through while in the course of our sessions, for example.
Jy's besig.
Well, I know when I'm onto a good thing, and I figured I was. So I sort of had I put a stop loss just very close to where it was, and now it's dropped, and I'm happy. I've had a very good day. But anyway, that's an aside. Yes, I do a lot of.
Right. What?
I try and do as little as I can, actually, but it depends what the market's doing. What
I actually wanted to talk about today, but we can talk about it next time, is getting to trade the S&P, getting to trade this index. This is the S&P 500. This is good money. This buying on these points
on that line.
Just to give you an idea, let me just silence this thing that's.
Can I ask you something quickly while I'm looking at exactly that chart? What kind of a variation in percentage are you getting it in one day on the S&P 500, i.e. maximum and minimum?
All right. All right. How this works, it depends which platform you're on. We're on the Pepperstone platform at the moment. Each point here. Okay, I'm gonna give you an example of a trade I did last night. I went in here. There was a support. There was a support.
Yeah.
There was a support level here.
Yeah.
This 10-day moving average was there. This 20s over here.
Okay.
You see how this is moving in a sideways
Yeah.
pattern at the moment. So I actually bought over here.
No, that is good.
Well, I went in on a, okay, but you guys see what I'm looking at. I'm just gonna draw. I'm just gonna draw that over the top there as well. Let me just get rid of this, that thing over there. I'm just gonna give you an idea of a trade and look at the points and how this works. Okay, so I'm not going to be talking just about this little piece here, but I'm going to go into 15 minutes. Okay. So this is where I bought. It came on to support here, and I actually, when I do such a short-term trade, I actually go into the 5 minute. Okay. So I'd already pre-identified that as a possible support zone, and you guys understand why. When you look at the 30 minute, you can see there's a support zone here. And then what I do is I look at this thing on the 5 minute, and this starts happening. This kind of candle, and there you get a flag, and then it carries on. So even if you hadn't got in here, you could have got in here. But okay. I'm going to take it. This is 43.78. 43. Let's round it off to 43.80. I'm just going to draw a line. 43. That's actually where I've got in. 43.80 is about here. It's about there, because I actually got in as this candle. I bought there already. So that's, and I got out this. The market, a very important thing about the S&P 500 as well is this is the futures market. I'm just going to deviate quickly. This is the futures market. This market is open virtually 24 hours a day. But the American market opens, I'm going to go into the time here. You see the time at the bottom here. It gives you the time. So at the moment here, we're sitting on 7 o'clock. On this Pepperstone at 7 o'clock, our real time is 6 o'clock. So it's an hour ahead. Now, the American market opened here. I'm just going to go into the time. There's 15, it opens at 3:30 our time. So it opened at 2:30. It opened roughly here. And very often on your best trading on the S&P 500 is to look at what happens when the American market opens. And that's where you get your real moves. And lately, almost every time the market opens, even if it drops a bit, the guys just come in and they buy it. But just to give you about, I got out roughly over here. This is what happened last night. It dropped first, got in there, and the market closed over here somewhere. Last night, 11 o'clock. It was about there. Closed here somewhere. And then the market still carried on after hours. It's still carried on going up. And this morning, European trade, it started coming down. My stop loss was exactly what you were talking about now, Graham. I ratcheted my stop loss up.
Yeah.
Like over there, I put my stop loss over here, and I'm also watching. You see, I'm on the 15 minute, even if not 5 minute. I'm watching this. It drops, and then it carries on. And the minute it carries on there, I put my stop loss there.
Yeah.
Then it goes up, and it does this, and carries on. And the minute I see it carries on, I put my stop loss there.
Yeah, yeah,
Then it carries there. I can see it's continuing. I put my stop loss there.
yeah.
And eventually I had my stop loss up here. I think up there. Carried on, and then I got taken out over here. But now, looking at the points, we're looking at 43.80 up to 44.20. Let me just work it out. 44.20 minus 43.80 is equal to, that's equal to 40 points. So in other words, I'm talking about the last two decimals here. It's 40.
What percentage would that be in day
This is-
trading? For example,
this
today would be
is
1%, 10%, what?
This is only a 1%. But remember that you're trading leveraged here. So
Okay.
It's
I wanna
20
know-
times.
yeah,
It's about
so
20 times. So
the
it's-
indexes are normally 10 or 20. To give you an idea, on each point, in other words, looking at the so in other words, you understand what I mean by 1 point. If I'm sitting here on 43.80, then it goes 81, 82, 83. So that's 3 points from 43.80 up to 43.83 is 3 points. Each point, but now it depends on your units, on your unit size. If I now go and typically, let's say you've got $5,000 in this account.
Yeah.
Each, I must think I'm going to explain this now.
Well, let's make it 10. It's a nice round number. I'm just trying to work out percentage because that's what I understand.
Yeah. If I put in here one lot, one size, that is one lot. Okay. For each, if I buy one lot here, then for each movement here on each point is $1.
Okay.
If I buy 10 lots here, then for each point move, it's $10.
But
on
how
a-
much is a lot then?
If I make my lot 10, in other words, if I make that 10, if I make it 1, if I only buy one lot, unit size is 1. Then for each point move here, it's a $1 move. Okay.
And how much is a lot? I'm trying to understand, for example, if you say you got $100 that you spent, you got in, okay, and you make like $1 on 100, that's what I understand, or $10 on 100. I can't understand lots and points if they don't relate to percentages in some way. Just me, I can't understand.
Right, irrespective of your account size. If I buy one lot here,
yes,
in my size here, if I've bought one lot, okay, I'm gonna go and buy this now. Then for each, I bought now at 44.07. If it goes up to 44.08, I would make $1. Let me just go and bring that down.
now is that $1 on $44.08 or
No, it's just $1. In other words, you can see here that price is the price I went into the trade, 44.08.
$4,408.
Those are points. It's not dollars.
So
This is
$69.
a numerical scale
Yeah.
that applies to the US500. This has got nothing to do with dollars. This is not a price. You see, you thinking of Ethereum or Bitcoin now, where the number in this column relates to price. This is not price. This is merely a scale. You understand what I'm saying?
Not really. I understand percentages. So if I made
is not
1%, if I
percentages.
lost 1%, if I won a point, what is it? A point on 2 million invested? Is it a point on what? What is a
Surely
point?
this is a price.
These are not prices. What you see on the
Yeah,
right
it's-
hand side
it's-
are not prices. This is just, see it just as a scale.
Okay.
It's like a,
Look, I don't have to understand. I'm just saying what I
Okay,
can't
it's like a unit trust.
it's
So many
this is just a
units
scale. It's
in the
like,
trust.
it's like
There's so many
kilometers
units
or-
in the.
it's like a measurement. It's like a,
understand.
centimeters. or
But
whatever.
there's a price. It says price on your chart here.
Yes, it's saying price here.
It says 44.8.
$69.213, isn't it?
You can see it as price. I don't see it as price. I see it
Okay,
as,
now you,
as a
yeah,
scale.
okay. Anyway,
Okay, but the point I'm making here is that now, for each point that moves here, on unit of 1, if I've only bought 1 unit, it's going to make a $1 profit or loss. You can see now there 44.08. Now it's dropped to 44.06, which is $1.7 loss. You can see that. I'm just trying to explain to you
Yeah.
the relationship
Yeah.
of how this works. You need to understand that first. So I bought it 44.08. I can see that, and I can see my dashed line there. The price has now dropped to 44.06.6. So I've lost $1.4 because I've only bought 1 unit. So for 1 unit, each point move is $1. But now, if I go and make that $10, 10 units, if I buy 10 units here, it's going to be 10 times that. So if I make, then each point becomes $10 profit or loss that I'm making. So if I make this was a 40 point move. So for 40 points that it moved, having bought 1 unit, that would have been a $40 profit, but 10 would have been a $400 profit. You with me?
Yeah.
On the points, solely looking at the points. So if I bought 10 units there, this move from there to there, which is 40 points, would have made $400.
Yeah, you're just gearing it differently.
Yes.
By buying 10 or 1.
Yeah. But that's a $400. Now, the point I'm actually getting to is what risk you're prepared to take. So let me just go and close this. Let me just close that trade. I'm not going to go on to 10. This account's got $5,000 in it. Okay. Now, typically, I don't want to lose. When I talk about risk, in other words, that's how much you risk losing. I wouldn't want to lose more than 2% on a trade. So now 2% of 5,000 is $100. So I wouldn't like to lose more than $100. Let's make it 3%. 3% is $150. Am I right? $5,000 times 3% is $150. So now I'm gonna buy here. Now I'm gonna drag my stop loss. So now you can see that look at the stop loss level here. When I pull it, it shows me my loss. Can you see there on the left-hand side, it says minus 100.
Jacques, I'm afraid I must leave now. I'll get the recording, but just excuse me. I have something I have to
I can see.
Right.
Yeah, it's
I've got-
$111
We'll carry
loss.
on talking about
Thanks.
this next time, but
Yeah.
you can see when you pull the stop loss here, you
Yeah,
can see
the
on left-hand side
125, 130.
there 130. So that
Awesome.
shows me immediately that there's 130. That if this price gets to that level, that's the amount I've lost. If this stop loss gets taken out. Okay.
Yeah.
So that's how you decide. Like I said, on a $5,000 account, I wouldn't want to make more than 3% loss. So, and by loss, what I'm putting at risk, it means that if this doesn't go up from here because I bought, because I want this to go up,
Well, it looks like it's
that's how
going to go
much
up.
loss I would make if that dropped to that level of 130. But I can tell you now already, if I bought there thinking it's going to go up, the stop loss of mine is going to be here somewhere, because I wouldn't have gone into that. I wouldn't have gone into that trade as a long position. If I believe this is going to go up, I don't even want to see this price go below this low. So that typically is where my stop loss would be. And there you can see if I hover over the dashed line, there I can see it says profit for minus 50. So I'll only suffer a $50 loss. But now, if you look at the profit you can make, if I take the same line and I drag it up, if you look on the left-hand side, it's now changed to TP. That TP is take profit. Okay. So that's typically now, if this.
But if you drag it, it also gives you the price.
Yes, that'll show me how much profit. There you can see $93 profit. Okay. So it immediately shows me my potential profit and my potential loss. And that way you can manage your risk. This is typically not a place I would necessarily buy. Just talking about this index now, I can tell you now already, if this drops down to this level, I'm going to be buying. And this will be roughly the 78.6. So off this bottom here, because you can see at the moment the trend's down, all right? Look what's happened here. This price has gone up. At the moment, this price is busy correcting. It's coming down. Now it's got to find a support here somewhere, and a very good place to find support will either be the 61.8 or the 78.6 here somewhere, one of these two levels. This is where I'll buy. You see there it found support on the 50. You see that candle? Immediately the buyers came in.
But it pulled back a bit quickly.
So there at the 50%, that's where the buyers came in. But now, if you'd bought here, you don't want to see this price go below this level. In fact, I don't even want to see the price go below here where my stop loss is. But that's typically where I would have bought. I would, you know, or if I'm buying here now, I would have preferred buying there. But if I'm buying here now, that's where my stop loss would be. Because if it breaks here, there's a good chance it's going to come down here. And I don't know what's going to happen. It might carry on. It might then end up breaking that level and coming down to this level.
But surely you should put your stop loss a little bit higher than what you paid, seeing it's moved up a bit.
I have to put it below where I bought.
Oh yeah, initially, sure.
Yes, but if this,
but as it moves up,
it goes up.
Yeah, you
The minute this price gets
chase it. You just chase it up.
Well, what I normally do is I get my stop loss to break even as quickly as possible.
Yeah, because there's commission and all that stuff to pay.
Yeah, it's very low on this platform. But typically here, if I bought there and I see this and this price starts doing that, this stop loss here, I'll bring it up and I'll bring it to break even as quickly as possible. So even if the price
do you use Pepperstone to trade?
I've used a different one, Darwin X.
So you just look at this and trade on another.
They're all more or less the same. This is just a demo account where I can just show you.
Okay.
Yeah. Craig, are you still with us?
Yeah.
You got any questions? Talking sense.
Jacques, quickly look at the. Geez, what am I looking at? Okay, not the S&P. NASDAQ.
Yeah, here's the
look at the NASDAQ.
It's doing the same thing. You see, what the NASDAQ's doing. It's
what do you look at? What do you look at? 4 hours.
This is a very, very, very important channel. This channel. See how the price has been going up in this channel.
Yeah.
And okay, let me just get these things.
Is it 4 hours that you're looking at?
Yeah, there at the top, you can see their 4 hour.
Okay. But it kind of looks like it wants to break out the bottom there.
Not yet. This price could go up there first, eh?
Yeah.
Because at the moment, this is a triangle. This is a triangle. A triangle is a continuation pattern. So there's a very good chance that this price is still going to go. I'm just going to delete that. That this price is heading up here.
Yeah.
We're definitely, if you are in here where you take profit, or and if this price gets up there, I'll look at shorting it. But okay, this is now on the 4 hour time frame, and you can see this triangle. It's made A, B, C, D, E.
Yeah.
Look at and the continuation, Craig, continuation patterns.
Yeah.
It often makes a B, C, D, E. It either makes
But if you look at the RSI
or D, E.
The RSI has got a very sharp downward trend.
The RSI will be very overbought. Look at that.
Yeah.
It's
Very over. Yeah.
Look
Look at the downward trend.
There's a correction coming in.
Yeah. Yeah.
Even if
that's what I thought.
Yeah, but remember, there's a warning of a correction. This price won't drop until it breaks this channel.
Yeah, it's got to break the channel.
Got to break this channel.
But to me, it looks like it is.
So it's not breaking it yet. It's still busy going
Your
up.
graphs look very different to mine.
No, they don't. On a 4 hour, maybe if you look on the daily, but on the daily you can't see this detail. You need to look on a.
Yeah, I'm on 4 hours.
You need to look at a. You need to look on a.
I need to get my.
On a 4 hour.
I need to get it on the candles. I've just got aligned.
Yeah, the rather put it on candles. Craig, you with us? You got any questions?
Yeah, sorry, I was just selling some Ethereum.
What's busy happening there? I haven't been looking.
Yeah, it's hit resistance again. That same high level as the other day, but I've just sold everything.
That's
had a good day.
Yeah. When did you buy, or how did you buy? What made you buy?
I bought when it went down. And it hit resistance at that level, and sort of.
Wait, hold on. Let me just open. Let me just open a chart. Let me just go to Ethereum. Here's Ethereum. What made you buy? Where did you buy?
I bought yeah, I think it was yesterday down where your cursor is at the beginning here when it started moving.
When it did that, when it started going up.
Yeah.
So you bought here somewhere.
Yeah, like around there where your thing is. Yeah.
Okay. Jesus, that quite a move today.
Yeah. Suddenly this evening. Yeah.
Yes. What I would do, not necessarily sell yet. Okay, the other thing you must look at, you must always look at fib extensions. You see I'm drawing this. Off that high there is the 100%. This is where it's going to stall. There at 127.
Oh, okay.
The next place will be the 161.8. It could even go up there. Sure. So remember what they say, let winners run. What I would do, my stop loss would be here for now, unless you want to take profit. But you see, the fact that it's going through this 100% level as well, there's a good chance it might get up here.
Okay.
But for now, my stop loss would be over here.
Okay.
And this might correct now. If this goes up here, once it gets up here, then I'll put my stop loss there underneath this low.
Yeah. Okay.
This is where my stop would be now, over here.
Sure.
And then as it does these little moves, I'll just move my stop loss up, move it up, move it up.
You have to pay attention to this quite a lot. You guys, Craig, do you spend, how many hours a day do you spend on this?
I just look at it now and again, you know, like sort of every half an hour.
Yeah, you see.
This
I get
this-
too busy, man. I really can't do it.
Yeah.
I'd be
You see,
shitting myself.
this sideways move here was from what was today, was from yesterday. It got down here adequate yesterday morning.
Mm.
And it's been sitting here for the last day and a half. It's
Yeah.
been sitting here. And what you can do is draw a trend line like that. And if it breaks there, well, the other thing is, of course, here was the resistance level here, eh? Obviously.
Yeah.
So if you hadn't bought down here, you could have bought that break here, where it broke through there. Well, here for a start, over there. Or there, you could have bought. And you set alarms. You can set an alarm as well. You know how to do that now already.
Yeah.
You just right click and you put an alert in. So typically, let's say, for example, I'll put an alert in over there so that when this price gets here, that this alert goes off. Then you carry on with other things. And what I often do is I'll put the alert there, for example. So now once the price gets there, I know I must move my stop loss up again.
Or shorted.
Or shorter. But I'll look for confirmation. I'll look for something that has to happen here. Breaking a trend line or whatever. You see, like here.
Well, the
like
trend
now
lines are all at the bottom.
You see this trend line that it broke. You see it comes onto the trend line, it comes off, it sort of sits around the trend line, and then it breaks the trend line, then it comes down. But what's interesting is look at Bitcoin. I mean, Ethereum's gone through the previous high. Let me just go on to the 1 hour. It's gone through that high that it made there. And look at Bitcoin. Bitcoin's hardly moving. Look at the small
Bitcoin
movement.
is dead.
Ethereum is sitting up here now, you know, relative to the high that it made there. Look at this thing. It's hardly moving.
Amazing.
Yeah. But getting back to that S&P 500, there's money to be made in these moves. You know, this move from here, for example, if I go into the 4-hour move, okay, that there typically you can make $200-300 in that little move there. But look at these moves. These moves, that was a 40-point move over there. Look at this move here is about 130 points. This is about 130 points. All these moves up, off, and each time this is the 50-day moving average. You literally buy and then it does a 100-point move. So depending on your account size and what risk you want to take, you then go and decide on how many units you're going to buy. Craig, you with me?
Yeah.
All right, let me stop the share, then we can see. Yeah. And the indexes, and it doesn't matter what index, you know, the Nasdaq is all of them, the Nasdaq, the Dow Jones, that if this thing gets back down to this level again, that's actually what I want to show you. Sorry, let me just share that again. This S&P 500, that's the 10, the 20, the 50. If this price comes through and gets onto this level around here, well, that's a definite buy. That's a definite buy if it gets onto this channel again over here. But you know, it might, I bought there last night, if it gets onto this level, even this 20-day moving average, it might come just down to there before it turns, like it did here, before it turns up. It could just be a shallow correction before it carries on up. You can look at there as well. But definitely over here, this area here is a shorting opportunity. And what's nice about a platform like this, you can go long or short. It's not like Luna where you can only buy. Yeah, you can make money in both directions. Craig,
I'm looking at
you understand that, eh?
I'm looking at the Satrix NASDAQ, Satrix NASDAQ chart.
Yeah.
And that looks a little bit different because, that's got the Rand
Yes.
exchange
That's right.
rate built into it.
That's right.
And it's kind of breaking down the channel. You got the channel going, and it's breaking down the bottom of the channel, and it's actually breaching the 50-day moving average, going down.
It's fine.
You haven't got it. You won't have it here.
I've got it. I'll bring it up now. Just hold on a second.
So I think it looks like a buying opportunity coming up.
No, not if I look at the normal NASDAQ.
No.
I wouldn't buy it there. Let me just.
No. I'm saying it looks like it's moving down.
Yeah, that's just a small correction. I see what you're saying. You can see my screen, eh?
Yeah.
You're talking about that correction there.
Yeah.
Yeah. You see the Rand's been strengthening over the last
Yes. Yeah.
day, 2 days.
It's 14.25 or whatever.
Yeah. So
that's why this thing is pulling down.
I wouldn't I wouldn't trade this index. I'd rather
No, but I'm looking for a buying opportunity.
Oh no. It's too late.
Buying is on the
that's too late in the game yet to buy this thing. But if I was going to buy, I'd buy on that level.
Yeah.
Well, obviously, if it dropped down, that's it.
No, it's not going to do that.
If the
Rand is going to tank again, and then this thing moves up again.
The currencies aren't going to move that much, eh? But looking at the normal NASDAQ, remember there's
I'll tell you why the currencies aren't going to move. Is because
because of where the dollar's sitting. Because of the dollar.
Our resources are just outperforming.
No, look at the dollar.
And our balance of payments is positive.
Look at the dollar index.
It's going to take another year for the Rand to collapse.
Look at what the dollar index is doing. This is last year March. Look at this massive move. We're now sitting in this triangle here.
What is the dollar index?
This is the dollar index. The dollar index is made up predominantly of the euro, and then it has all
the major dollar currencies against other currencies. Yeah.
And the Rand pretty much as well. This thing might get down here, it might get down here, and then it's going to turn again. Because remember also the interest rates, the whole thing with the interest rates. The minute they start raising interest rates, this thing's going to start taking off and it's going to start going up. But we're not there yet. So we're sitting in this triangle. So they're not going to be major moves in any of the currencies over the next year.
It'll take another year. I think it'll be another year
until they start talking about tapering and
when they panic about inflation.
Okay, Craig, you
can see you're going to buy a 4-wheel mini tractor for 18,000 Rand. He sees these adverts pop in all the time. Wants a bloody tractor. You're nuts.
Craig, you got any questions?
Okay, boys.
No, I'm all good, thanks, sir.
Yeah.
Okay.
Okay.
I'll let you know when we get together again next week sometime.
Cool.
Yes. Okay.
Obviously, if I see anything interesting, I'll post it. I'll also post like on the S&P 500. If you wanted to on that Pepperstone platform, you can fund it with your credit card. Go paying 20,000 Rand there or something. But you must. What you should do on that Pepperstone account is get used to trading it on the demo account first. let me
Yeah,
just show
yeah,
you
yeah,
something. Let me just show
Yeah,
you
no, I
something
think
here
you're right.
again. Let me just share my screen again. This is typically what you want to do. You can see the chart with all the graphs. Because Bitcoin and Ethereum, you trade somewhere else. But what I've got here, let's close this dollar index. What I've got here is this is the, you can see the screen, eh? This is the DAX, the German DAX. This is an index. So I've got the DAX. I trade the DAX. Then along the bottom here, I've got the American indexes. This is the S&P 500. This is the Dow Jones. This is the NASDAQ. And this is the Russell. The Russell is all the smaller companies in America make up the Russell. And then they also call it the US 2000. And the US 2000 behaves a bit differently to what the other major indexes behave.
Yeah.
And then here I've got oil in the second one here, oil, and this is actually silver, but normally gold there, gold, silver, oil, gold, and this is the UK. This is the London index.
FTSE.
The FTSE, yeah. But there's opportunities on oil as well. Look at oil. As I'm going to go on to the 4 hour. You see, forget about this numbering that I put in here. I'll go on to the daily. You can see how trend line. Look at your 200 moving average. Go and look at where your moving averages are.
Yeah.
I, for example, bought oil over there. Oh, well, I've just deleted that support level now. Let me just come put it back. You see that support level over there?
Yeah.
You see also, if I take it off this low up to there, it was a 61.8, and it was a trend line. This trend line here, and that support level. There's not a daily. I'm going to go into a 4 hour. That's that level over there. It's a good buying opportunity, you know, and then it goes up. You make money here.
Did you sell? Or do you still hold?
No, I stayed in this position. I got out here somewhere.
Okay.
I started bringing my stop loss up. No, I got out here somewhere. But you look at this move. Then it went to the 78.6. You see the 78.6 there?
Yeah, then it drops.
Of this move.
But that's when you should have shorted.
That's where you can short it. And typically, yeah, you've got a trend line going up there, that last bit over there.
Yeah. And you would have waited till it breaches it. Trend line.
Now, I'm actually going to buy it. This is just a demo. I actually bought there because I wanted to show you guys something. So I'm just going to go close that. But this is where I'm going to buy it over here. And I can put in like a buy order there already. Buy limit. So there typically, because remember it's this trend line and the 78.6 here somewhere. I'm going to go into the 1 hour now. So yeah, it should find support here somewhere. And I know if I buy here, my stop loss is going to be just below here.
Okay.
And can you see this was an ABC move? Can you see this wasn't a 1, 2? A lot of guys initially thought that this was going to be a 1, 2.
Yeah, that's
3,
what it looks like.
4. 4 was going to be over here. 4 was going to be here. And then 5 was going to be down here. You with me? 1, 2, 3, 4, 4, 5. But it didn't. It didn't make a 5-way move down. So now
it was just the ABC.
It was just an ABC, exactly. So but even if this made 5 moves down there, remember after a 5-way move, it has to make a correction. So this would have been a brilliant buy opportunity here as well. But this was actually just an A, B, C correction.
So what have you got coming, do you think?
It was a C to there, and then it went.
So now is it a 1, 2, 3, 4, 5?
Now one could argue this is now A, this is B. You could have this happening, eh? This could be A, B,
and a longer C.
C could end up here, and that coincides with this 200-day moving average. If it
Just
gets
to-
down here, I promise you, I'll be all over it. I won't even think twice about it. I won't even think twice about buying there, especially because it's a 200-day moving average.
Yeah, and
if
and
you
you've got
go-
that bottom support level
See
on the
there,
left.
that, and it's the 78.6 of this move
Yeah.
as well. It's sitting
Yes,
over
yeah.
there. But it might not get there. And it's not going to go straight there if it was going to go down there. So like I say, one day at a time. So what I can do is I can buy here. And there should be some kind of reaction. And then depending on what reaction it gets here, I'll decide when I'm going to close or take profit. But this is the kind of thing you should, the point I'm making is just go and open up these couple of instruments, the indexes, oil and gold. Look at silver. I was going to show you on silver what happened here. This is gold, right? XAU is gold. Yes, silver. I did a trade here. You must go and look at these things. Here was a C wave move down here. This was like an ABC. This is a 200. I'm on the daily. This is a 200. But this came down to this level, yeah. Which was
But
a
you see, if you look at your
78.6.
RSI tells you it's going to go up.
No, not necessarily. Not necessarily. The RSI didn't tell me anything yet.
I didn't. No.
On a shorter time frame, yes. On a daily, it wouldn't have shown you anything.
No.
It is oversold, yeah. But this price could have dropped further down. It could have dropped down there. But it dropped onto the 78.6. But there was a reaction over here. You see the 78.6. And also this was a 1, 2, 3, 4, 5. And you see this was 1, 2, 3, 4, 5. I want to go into the 4 hour. It's going to squash it. This is I actually bought over here somewhere. Once you see here, this looked like a 1, 2, 3, 4, 5. And you see in this move here, 1, 2, 3, 4, 5. Here was a divergence. You see the divergence here. This is now on a 4-hour time frame. You see the divergence there. And then I'm just going to go there. You see the reaction here. You see this candle. You can also see that's a flag. You can see that's a flag. This is not a turnaround. Can you see this is a turnaround? See, this is a flag.
Yeah.
But then this, you see this flag here. No, you know what? I didn't buy there. I saw this. I want to go into the 1 hour. You see this flag? This is a beautiful flag. I saw this impulsive move here, going back, going over these highs here. And then it started making this correction. And I actually bought it here.
So are you still holding?
No,
You bounced it.
I bought it here because I could see this was a correction. And my stop loss was just over here. And then it went up and I ratcheted my stop loss up on the 30-minute. I ratcheted my stop loss up. My stop loss was right up here. And then it turned and it dropped right back. Now, this could be a 5-way move up. And what it could be doing, obviously, now is an ABC correction. And it could be doing ABC. And I can guarantee you if it gets down here somewhere, the guys are going to buy it again. So let's assume that's now a 5-way move up. That this correction's for the time's finished. So that's 5 up there. And now it'll do something like this: A, and then there's probably a B, and then a C down here.
That's when you buy it.
And that's where you buy it. And also draw your fib level in here. And you can see either
78.6.
Either there or here, you're going to get a reaction. It now depends what happens here. When this price comes up here, if this price comes up and it stalls there somewhere, and then it turns down again, then you can measure it. Then you can say, okay, this was a leg down.
And the
And you can measure it like that.
CBC leg
And
must
then
be
the
the
C
same.
would be, then your buy area would be there. So
Yeah.
with me.
Yeah.
Craig, you see what I'm doing?
Yeah.
Hey?
Yeah.
Craig, you happy?
Yes, yeah, I'm happy.
You
with
understand my logic?
Yeah.
It might
This-
not do that.
I was busy with other things, but this was also a very clear buy here. With this divergence, that was a
Oh,
clear buy here.
absolutely. Yeah.
Especially, you see what happens here. You see this looks like an ABC, and it turns around and like it wants to carry on, and it doesn't. Look at this reaction you get off here, and it makes a higher. It made a higher low. This low was higher than that low, and it takes off. Yeah, and you could also have drawn a trend line even in like that. See, I bought over there, but you could have bought here, you could have bought here as well, breaking that. Because remember, here you had your divergence. You could have bought here.
Well, on my for trading, I couldn't do it.
No,
Because
so-
you see, my problem is I can't spend the hours. I'm busy with tax returns and
yeah,
queries
I
and
see-
what, and I will miss the boat.
Yeah, I see gold. Gold is in a bit of a funny setup at the moment. This is on a daily, but this has been busy here with a big correction. You see, but drawing that channel, buying areas, and how I took off here, you'll also see that this buy area here, if you go and look at this fib here, 61.8, but let's just go out. You see, no, you know what, turned there, it was this level here. Look at that, exactly. I'm
It's
taking it
too
off the
far
bottom
down,
here. I'm taking it off the bottom here, right? Look at that, exactly on 38.2. The reaction you got there. That was at 38.2. And also this, if you go and look at this height here. So in other words, from the top down to here, these are all things you see that level. So in other words, it drops to there, then it went back up. So you could say
It
that
drops
this is
the
like
same
an A,
level again.
that was a B, and then it dropped. I'm measuring that height, right? I'm measuring that height over there. So let's say this is A, and then B, and then I'll measure that height again down. You see,
Yeah,
you see
goes
this
down
level,
to there.
and it coincided with that. And by the time you got here, you could already draw this channel in. You understand that? I didn't have to wait for the price to get there to draw this channel in. There's already my channel.
So did you buy?
This channel.
You should have bought it at 38.2.
Yeah. So this level here coincided with this level, with the bottom of the channel and 38.2. And look at this reaction here as well. You see this candle, that candle as well. Then it came back down.
But you know, you would have bailed when it got to the second one. You would have thought it's not quite.
Yeah, but remember, you can always get back in, eh?
Yeah.
Always get back in.
Yeah.
There, if you'd been in this is where you would have got out to put your stop loss up there. But you know how many guys bought here?
Where?
Some guys wait for the breakout of a channel. They're looking at this corrective channel. And they only buy there. They say, oh, now this correction's over, and they only buy there. And look at this.
Oh, shit.
Turn right there. That's why I prefer getting in on when the price drops like this. Here as well, this price drop here, you'll see if you measure this thing as well, you see that price there, it was a 61.8, turn there. Okay, that wasn't that easy. All you can do there is, but draw a channel there. It would have been tricky. You know, that's where I would have typically wanted to buy in a trend before the time. But you see this very sideways movement. You see the moving average as well, moving sideways here. This gold doesn't know what it wants to do here. This is dangerous to trade. This is dangerous.
Yeah, for
You
sure.
know,
Don't know
if
what
it,
it's going to
if
do.
it gets down here, the 78.6, you can justify buying it. But what do you do here? You can't motivate yourself from you can't. So what do you do here?
No,
You short it,
you don't know what it's doing.
you short it, you long it. You can't do anything with this, and you have to realize that when you look at something, often it doesn't give you an opportunity, and you must make peace with it and leave it alone. Now this is gold, and very often there's a correlation between gold and silver, but at the moment gold's going sideways, but silver gave an opportunity. So you've got to be looking at both of them. You've got to be looking at gold and silver.
Yeah.
Because very often the one gives you an opportunity, but the other one doesn't.
7 o'clock.
And you see this oil price, eh?
Mm,
You see it's getting close to this level.
sure.
It's
I
getting
must
close
shoot.
to this level. Right.
Thanks a ton, eh? We'll chat to you soon.
We'll talk soon.
Thanks,
Yeah.
Rock.
Okay.
Hey, you got any
Go well.
questions?
Cheers,
Okay.
Craig.
Cheers, Rock.
Okay. Lekker. Keep on.
Ciao, ciao, bye.
Thanks,
Bye.
Boom. Believe.
We'll have coffee on Saturday.